The moment we've all been waiting for. Nvidia, 10-for-1 stock split. How will it trade? What other factors could be affecting the price action in Nvidia today? We'll discuss that. Elliot, loving up, showing some love to love. That's what I wanted to say. Not much to talk about earnings. S&P adds and deletes. Got some big price action there. Rollover on Wednesday, S&P futures contracts, man. For a boring Monday, we got a lot to cover. Get your cup of coffee and get fired up.
Welcome to Benzinga's PreMarket Prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
All right. Good morning, traders and investors. We're down 4 1/4 handles off the low of the day by quite a bit. So this is pretty much flat there. The dollar's having a good move, up 40 cents at 105.26. TLT in the red again, not liking those Friday numbers, down 20 cents. Oh, now flat at 91.50. Crude crawling its way back up 70 cents, 76.24. Gold really not shaking off that bad day on Friday, down 270 at 23, 22, 30. Silver back under 30, even though it's up 45 cents at 25.89. And Bitcoin slips out of the 70K handle. We have Bitcoin futures. They're down $80 here at 66,600. Ooh, 60. A lot of sixes in there. We got our guest at 810, so we got to bring in A, B, and Triple D on the hop. Dennis, a 2-0 loss, the first game of the series, is not a big deal.
Yeah, 3-0 empty netter. Not a big deal. I will say it's not a big deal. We're just going to 30 seconds on it. The Oilers played really well. They got Bobrovsky, just stole the game. He was excellent. Keep playing like that. They'll be okay.
Okay. AB, how was the weekend, man? Good to see you here on Monday. How was your weekend?
Weekend was good. Detroit was, it was buzzing down here. We had we had some Tigers games to go to this weekend, so that was fun. Played some golf. All in all, it was a good weekend.
Okay, we got to get
Let's
to the
do the
market.
1-minute summary of the GameStop debacle from
Yeah,
Friday.
so
1 minute.
last Friday, the moment we had all been waiting for, Roaring Kitty's return to streaming. He started streaming. Well, so first of all, was scheduled for noon, and I know we were 1 minute late today, but Roaring Kitty was he was on cat time, and it was a little bit more than
It's like a cat nap.
Yeah, he was a little bit more than a minute late, and it was interesting seeing the price action in GameStop. I want to say it got halted to the downside before he even started his stream.
Twice.
And then by the time he actually had started his stream, that was kind of like a sign for how things were going to go. If you watched it, he started the stream, he had his sling on, and he had a wrap around his head.
You show a picture of him?
Yeah, let me try. I'll try to find one.
Go if he'll find a picture of him.
I'll just search Roaring Kitty on Twitter and see if something pops up. But either way, I mean, I think this was a lot of people's first time tuning into one of his live streams.
My first time.
And I think it was kind of like jarring for a lot of people, just kind of being like, what is this guy doing? This guy's crazy. But it's kind of what he had been doing. And back like 3 years ago during COVID, when he was streaming a lot about GameStop, he would do these things, and he's kind of, I do think he has this knack for. It wasn't entertaining for me per se, but like I can see why people were watching him, at least during COVID when nothing else was going on, and he was able to maintain an audience. But had over 600,000 people watching, as Beer Guy in the chat was saying. So whoever had the over on the 500,000 line we set, that hit. But either way, the stock, that's what we care about, was not doing well while he was on. Roaring Kitty at the end of the day wasn't really saying much. He showed his positions, but never really talked too much about, the story of GameStop and why he likes it now. So I don't know. I feel like after that, if he tries to go live again this week, I bet you less people will tune in this time. But either way, was an interesting event to have on a Friday at noon.
I tuned in. I watched the entire hour, and I'll never get that hour back. It was just a circus show. And I've never tuned in before. So, my expectations were there's going to be, he's going to say some stuff. He's going to have a lot prepared. He's going to he's been away for 3 years. I mean, there's going to be some pretty cool stuff he's going to say. And it was like, he did the whole circus act, like I've been in a car accident type deal off the bat. And then he really had nothing. He was just kind of rambling, looking at the chat a little bit, drinking a couple beers. I mean, it was weird, man. It was all weird. And the market did not like it. Like people were saying, oh, this is really good. And I'm like, I don't know. Like the stock went from 37 down to like $28 on the thing because it was just weird. So
here's
I've
what he
never tuned in. I will probably never tune in again. It was just too weird.
Here's what he looked like with his bandages on and his when he
Weird,
first
man.
started, he had a sling on, and I was like, what is going on? But again, I think he does these little bits and whatnot, and like the drinking the beer on stream and stuff. That was stuff again he used to do back in the day. So I mean, look, like GameStop this morning. Actually, we should talk about the price action this morning. Yeah, getting a little bounce up $1.89, up about 6.7%. But I mean, anyone who really bought this in the last, couple weeks is more likely down on it than not. But at the end of the day, you're still trading up, more than 100% higher than we were at the beginning of May. So it'll be interesting to see if GameStop ends up coming all the way back down to that like $10 level we were trading at before, or if it can maintain and stay up here at around $30. Either way, he's got a couple more weeks on those options. So he's got, those are the June monthly. So those expire June 21st.
So multiple points here I just want to make for the people who didn't watch it is one, he said they're all his positions. He's not working with any hedge funds. So we still don't know where the other 170 million came from because we were adding up, like people were adding up that he made 30 or 40 million the first time. Where did he make the other 160 million? Did he make it on the options, going up? Did he have options previously to that? So saying he's positions, he's not working with anybody. And then just, his thesis, Joel, and we were talking about this, is he was talking about, believing in Ryan Cohen for the long term, at 3, and you said, Joel, I never heard that part, but he had mentioned a 3-year, time horizon for this, like 3 years of believing in Ryan Cohen, give him some time. And I'm like, and you made a good point. Why do you have short-term options? Like, why do you have so many short-term options if you're playing this for the long term? Why didn't you buy leaps? Why did you come in here with 5 million shares, but exposure to another 120 million shares that expire in 3 weeks? Do you know something? Obviously doesn't act like he knows anything. So I don't understand that whole thesis. Or was it just completely that you thought, I'm going to buy the options, and once I tweet this, or once I say I'm back, they're really going to pop up? I mean, it kind of looks, if I was a regulator looking at this, it kind of has a bad taste. I don't think the regulators have anything, because you're allowed to buy stocks, you're allowed to buy options, and you're also, allowed to show your positions. I mean, he never told anybody to buy. He very much acted, and some people were saying the whole thing was an act, that he was trying to act incompetent because he doesn't want regulators breathing down his throat. So this was the whole thing. And there may be a point to that too. Maybe he was just coming on there saying, here I am, just Joe, investor, drinking some beers and, hoping my stock goes up. And maybe, that's not the case. Maybe this was an act just for the regulators. I don't know any of that. I'm not in Roaring Kitty's head. All I can say is he did a pretty good job if that was an act.
I will say too, I mean, a lot of people were talking about, like, oh my God, he's streaming while his position is falling by, $150 million.
He didn't care.
He didn't care. And I think, when you look at, I mean, here, I'll pull up, this is the most recent, screenshot of his position that I have. I don't know if he posted one after Friday's action or if he's got one this week, but this was his position as of June 6th. And you can see here, I mean, these have gone down a lot, but the big thing that I was looking at was the cash total. This third bar down here where my cursor is showed he had about $29.5 million in cash. So it's probably a lot. He looks like he maybe took some gains off the table at some point. And if you have $30 million cash sitting in your brokerage, you can probably stomach losing, 150 and unrealized gains a lot easier than if you didn't have that money. And there's probably a lot of retail investors that don't have that type of cash pile sitting there that are probably losing money on this stuff that Again, like it's just, to me, I was like, why? He seems like in pretty good spirits for how much money he's losing. And I look at it, it's like, oh, well, he's got $30 million in cash, so that probably helps out.
I think that, and one thing, and I'll just make one comment. We'll bring in, the cow guy here. The main thing, Dennis and I have been doing these shows. We've been training and investing together for a long time. And, what we talk about when we have our discussions offline on this is like, man, I hope other people aren't getting hurt. I hope other people
Oh, yeah,
are
for
not,
sure.
I mean, and that's to me what I think about it. Yeah, whoever's getting rich, good, ring your register. I just hope, people in your chat, we say this, time and time again. If you are good at trading stocks like this, if you have the capital, if you have the risk, if you're willing to do things, by all means going at it. But, any new listeners to the show or
Stuff's
people
hard
that
to
are,
trade, man.
that are inexperienced in trading or just starting out investing in stuff, if you have the capital to say, hey, I'm going to put aside X, but really when I look at this and everything that's going on, I just think, well, people are sticking to the hedge funds or whatever. I think about, what the little guy and what people, this is just a kind of thing. We saw what happened to this kind of scenario during COVID. Like, it's not like you don't have historical precedents that what can happen or will happen. So that here, on this part of Benzinga, on this part of the company, we are concerned about you investors and what you're doing and the decisions that you're going to make that are going to affect your long-term investing. So
Buy
that's
good companies, reasonable valuations. GME, not a reasonable valuation. Maybe they're saying the cash and they're going to stick it to the man. I don't buy stocks because of a movement. I buy stocks to make money. So that's, where valuation wise, they came out with earnings. The earnings were not good either. I mean, I don't know. Maybe there's a more story here. Maybe Ryan Cohen's going to do something because he is behind the scenes, and we know this is a big group and they're going to try to keep the stock elevated here. But at a certain point in time, fundamentals do matter here. Let's bring Cow Guy in. See if you actually watched this as well. We'll get his quick thoughts and then get his thoughts on the market. And we'll move away from GameStop, hopefully for a long time.
Scott Shellady, known as the cow guy. How you doing, Scott? Maybe I should have been the kitty guy instead of the cow guy, huh?
Yeah, well, maybe. Good morning, fellas. No, it's a different world we live in. That's for sure. My father got started in this business in 1962, and unfortunately he passed away a while back. But if he was still around with us, he wouldn't recognize the industry that he got started in back then. That's for sure.
What did you watch it? Did you watch The Roaring Kitty or any of it there, Scott? And just you didn't bother.
No, you know what? I don't get the chance, and my time is so precious that I've got my own show. I don't know if you guys know that. So if I'm not out there, I do 7 hours of radio and TV a day, and if I'm not doing that, I got to research for my show. So I just don't get the chance.
So you don't really have what are your thoughts on GameStop overall? Quick thoughts, and then we're going to move on. GME.
Well, I know everybody wants everybody to be. I understand the government side. Actually, I understand everybody's side. It's just one of those things that nobody could have foresaw to happen. And there really aren't any, there's no regulations really that I think that are going to protect anybody. If you're going to, it's one of those things. If you want to be involved, you're going to, make sure it's money that you can afford to lose. But, we're supposed to protect grandma and her money. But it's just one of those things. If you want to get involved, you're going to lose your money and have at it. I can't help you any more than that. I can only lead you to the water. I can't make you drink.
Good summary. So Scott, let's move on to another stock we haven't talked about here today. Nvidia is trading post split. It obviously had the huge run up into the split. Now we're getting a little bit of a post-split hangover. We're down just slightly here in the pre-market. I've traded splits for years. I typically am long the stocks into the splits, and then usually I trade them from the short side afterwards. So if we're looking just textbook here, a lot of times you get that buyer exhaustion after the split. What are your thoughts here on Nvidia after the split?
Wow, it's amazing. We had a guy on my show probably about last March, actually, is when he came on and started to talk about Nvidia, and I think it was, I don't know, it was below $300, maybe even like 180. And to watch that company go from that to what it is today, is just breathtaking. And my thoughts on it are, I love technology. I used to be on the board of a technology company in London. We floated on the London Stock Exchange in 2001. So I have a fairly good knowledge about all that's involved. I can't code, but I do appreciate it. And to see what these guys are doing with these processors and what NVIDIA can do, I mean, it probably, no, but I think it really could be the savior for what our economy needs. You know, the last time that we had a balanced budget or even a budget surplus was during the internet boom with Bill Clinton's years, right? And since then, everybody's asked me, what's going to be the next, knight in shining armor to come around the corner to really rescue us? And I thought maybe it would be healthcare or some sort of technological advancement in healthcare. But no, I think it really could be. It could be this NVIDIA wave and anything else that's got something to do with it, because the next big trade that everybody keeps looking for is another stock like NVIDIA, where our research suggests that the drawdown on electricity is going to be so great for some of these data centers that are housing all this artificial intelligence that, and then coupled with the fact that electric vehicles are also being pushed by the government, whether you want one or not, that there's a lot of opportunity in power and energy that will really kind of give you a lift with what's been happening with, say, artificial intelligence. So there are so many things and so many derivatives of, say, this NVIDIA play that are going to help that you have an opportunity to make some money. And I understand the stock split, and I understand the way you play it, and you're probably not wrong. But I really do think that this is something that could be really groundbreaking for the economy and maybe lift us out of this doldrum, because the $35 trillion debt is hanging like a millstone around our neck. We're not doing well. The economy's shrinking. I mean, this could be the next 5 years where we really needed something like this.
So you would not be a seller of NVIDIA, it doesn't sound like.
I guess the long answer is that maybe on a day trade I would, sure, but in the long term, I would be accumulating.
Yeah.
You made a point, the economy and the economy slowing. Are we getting into, the numbers, mixed data numbers on Friday? Obviously, we have some inflation numbers coming out. Relating this all to interest rates. I mean, where are the pockets where you're seeing the slowdown in the economy, and what's your outlook for interest rates 2024, early 2025?
I don't think we're going to. I don't think we're going to change interest rates this year. I know everybody wants a cut. They've been talking about up to 7 of them starting last December the 13th. I don't think that's possible. I think that inflation is stickier than anybody could ever have imagined. And we're going to have to see those unemployment rate rise to 5.5% before they really could start to do something like that. Because if here's the big problem, the $1 trillion question, is that they've been telling us that they want to, once they get inflation under control, they can start cutting interest rates. That's been the narrative since December the 13th. Everybody took that and ran with it. The market really loved it. But we're starting to see that maybe that can't be possible, because they're having a difficult time getting getting inflation under control. And so the narrative is shifting from getting inflation under control to, we're starting to see significant weakening in our economy. Maybe we're going to have to actually cut them because the economy is weak, not because we're getting inflation down. And then they wrestled with that for a little while. And then you had 2 of the G7 central banks, Bank of Canada and then European Central Bank, come out and cut rates before they're anywhere near their 2% mandate. They're both at the same mandate that we are. Canada's at 2.7% right now as far as inflation goes against their 2% mandate, and the Eurozone is at 3% against the 2%. So they both kind of broke the chains of we can't really do anything until we get to our 2% mandate. And so I think that the Fed sees that as maybe an opening salvo that they might be able to cut rates. And I don't think they should, but you know what? I've lost a lot of money in my life by trading what I think should happen instead of what will happen. And I think that they maybe will try to cut rates once this year. I don't think they should, because now they've gotten some cover from the European Central Bank and Bank of Canada, and their narrative is shifting from bringing down inflation to trying to help rescue the economy, especially in light of an election. So then your next question would be to me, well, what does that do to stocks? I think if you cut rates because you've got inflation under control, that's good for stocks. But if you're having to cut rates because your economy is weak, I don't see that being good for stocks.
Interesting scenario. So, over like what 2 years, a hard landing, soft landing, crash landing, no landing. We're still going. Are you in like the hard landing camp? Is it just like they're not going to be able to fine tune this, or soft land? Because I've been arguing on the show. I mean, we've had people come on, we've had guests, and even other co-hosts of the show. Recession, recession, recession. I'm like, I don't see it. I don't see it. I don't see it. Now you're starting to see a little, airlines starting to slow down a little bit. And then on the also address this too, on the inflation front. I mean, I see some commodities going up, but I see crude going down to the lower 70s here. I mean, bounce back a little bit. There's always major components of inflation. So is it possible to fine tune this? Just kind of maybe a little bump. When you land a plane, it hits and you're like, okay, we're landed, but then they come up again and they bump again, and then you're like, and then you land safely. Is that the way you think it's going to turn out?
No. I think we're in for a long landing. The geniuses at the Fed had predicted 3 more rate cuts in 25 and 3 more rate cuts in 26. And so, I mean, they were looking at 225 basis points of cuts. At the same time, they thought that they could still bring down our inflation rate to 2%. So number one, that's what we're dealing with here. Number two is when you have the U.S. government spending as much money as they are, we're going into a $1 trillion worth of debt every 100 days.
It's crazy.
That's how you stave off a recession that I've been thinking is going to happen any day now. Now, my New Year's resolution this year was to not give a time on that happening, but they're doing everything that they need to do to have that happen. So they spent so much money that most of the growth is going to be the government. And if that's the case, that's kept us in a 1.5% to 2.5% growth rate. That keeps us out of recession zone. They continually employ people. And I just did this on my show last week. But since 2019, there have been 3 million jobs that have gone to foreign-born people in this country, i.e. illegal immigrants or legal immigrants. And since 2019, for U.S.-born people, citizens, they've lost 1.4 million jobs. So that everybody's been waiting for that jobs number to turn over. And the reason why we still get good numbers is because you can make an argument, but for the last 4.5 years, a large majority, if not all, of the jobs have gone to foreign-born workers. So we all keep looking at that number thinking, oh my God, everything's great, but it's not. So you want to talk about stagflation, sticky inflation. Yep, you've got a slowing economy. The only other thing you need to do is have unemployment roll over. Well, maybe that's already rolled over. We just don't know about it because we've been hiring non-citizens. And so there's so much out there that needs to come out in the wash. The best thing I ever had somebody say to me, guys, is I hope I'm still alive in 25 years so I know what was really going on behind the curtain right now. And I think that that's a great thing to say because the one thing that's been very difficult for a lot of people that I have on my show, or maybe even what the people you speak to, is that why are we still putting all these people to work and it's not making a difference? Well, that's the answer. And that was something that was it was in the Zero Hedge, it was in the Wall Street Journal. So that's just not me making something up. But the numbers are there to prove that that's the case. So we're in for a long landing. We're not going to be able to fix this until we get some people in Washington that can stop spending. They're going to have to cut entitlements, guys. That's just the way it is. We are broke and we're still arguing about where we're going to spend money, which is insane. And unless that changes anytime soon, that's why I say long landing.
Okay. I think you stated your words very well there, your position on the economy, soft landing. Scott Shellady, you know him as the cow guy, coming on pre-market prep this morning, a little bit early. We appreciate your insight as always and be talking to you again soon, Scott.
All right, guys. Thank you.
Thanks, Scott. I mean, he's saying everything like we know. Like the debt, I mean, is just unbelievable. We've talked about that in the past, given up talking about it, like $1 trillion, whatever It's like nothing. And I mean, again, with prices where they are now, $1 trillion isn't what it used to be, but holy crap. Like, I mean, 35 trillion or 36 trillion. It's like, how do you ever get out of that? I don't even know. But maybe it's going to be AI that pulls us out of it. Maybe it's going to be, all these companies. But let's go back to Nvidia here for a second, because I've traded stock splits for so many years. Everything, and there's a lot of issues here with Nvidia here today, is what I'm going to say. And I'm still long Nvidia in the long-term account. Going to hold in the long-term account. Am I going to hedge some of it though, or trade it from the short term, or trade in the short term from the short side? Potentially. The reason being, one is stock ran up 20% of the split. I think you get a post-split hangover here. Two is I'm very worried about today. We have the Apple event. What is Apple going to say today? Because last time Apple was saying some stuff, Nvidia got hit because Apple was all of a sudden being viewed as a competitor. Talking about chips, talking about other things here, like kind of coming into Nvidia's pool and swimming a little bit. That's probably going to get said here again today. So it's kind of the perfect storm. Sorry, folks, for Nvidia from the long side here. If I was long Nvidia as a trade, I would be selling it this morning or selling it last week. I mean, it's basically at the highs. So as a trade, with my trader hat on here, I would be a seller right now. Not long term. Holding it long term. I think long term, there's still we're in the early innings of AI, and Nvidia is in the pole position. But short term, you're post split. So you got the post-split hangover going on, and you have an Apple event where they're very likely to talk about competing products for NVIDIA, or at least talking about, them as an AI. And we've seen this Apple versus NVIDIA here. I was long Apple through the weekend. I plan on, trading it around the event as well. I do think Joel's going to win his bet, even potentially today, depending on what they say. Maybe they don't say enough, and maybe Apple gets hit. We don't know on these events, but how I like to be long into events. So I'm like, it's a no-brainer to buy it on the close, because in all likelihood, it's going to be up on Monday morning ahead of the event. And here we are. The market's weak. I hedged it with QQQ, and I picked up a 0.5%. People say, oh, 0.5%, who gives a crap? I mean, 0.5% is, you can pick up a 0.5%. Here, 0.5% there. That's how I make my living. I don't make my living on 7, 10%, 20%, 100%, 10 baggers. I don't. I make my picking up a little bit here, a little bit there. Predictable patterns. Stocks go up ahead of events. Nvidia ran up ahead of the split. Apple's ran up a little bit here today ahead of their AI event. Ran up on Friday as well. What are they going to say? I don't know. Are they going to say stuff that could, worry Nvidia shareholders a little bit? That's potentially there. So I think right now, not saying I'm buying Apple. I've actually already sold my Apple. It was an overnight trade. I just got out of it just a few minutes ago before I was not going to talk about it. But I think coming in here and buying Nvidia blindly, saying, oh, it's $120 now, and all retail buyers are going to be coming in now, I don't think that's the case. I don't think we're at the retail buyers where they can't afford. They do fractional shares now. I don't think we all of a sudden just open it up that everybody can afford Nvidia shares, because they did fractional shares for years on Robinhood. So I don't think you have that lift as well. I think you get a post-split hangover in Nvidia, and I wouldn't be surprised if the stock's down significantly today.
Dennis, we talked about it in the pre-market show, and my methods of technical analysis. So mark down that level. See if that level holds on the downside.
What level? You didn't tell the show what level you're talking about.
Well, I don't want to tell them. I wanted to just save it. I just
you only tell me. Joel's
I'm only going to tell you because they'll say, oh, it's not a good level. But we'll see. We'll see what happens. You got. I would keep an eye for I think the best number, better than that other number, or about as good, would be see what happens with that all-time closing high. Actually, I mentioned that to you on last week too, and that comes out now to 122.44. So that's a good level on the upside. That's the highest anyone's been marked. So we'll see if that acts as resistance in today's session. We also have some chip news, right? We have some upgrades and downgrades, right?
We had AMD catching a downgrade from, was it Morgan? Morgan Stanley came in and downgraded AMD this morning. Let me go ahead and pull up the exact numbers in the, so Morgan Stanley downgraded the stock from overweight to equal weight. And I mean, AMD, for as much love as Nvidia is getting, I think a lot of people have just assumed, and I thought this was a safe assumption too, that AMD would, maybe not grow as quickly as Nvidia, but still get some of these, still get a big tailwind from Nvidia's growth. And AMD has really, I think, like underperformed expectations here over the last few months. So Morgan Stanley downgrade maintains price target at $176 a share. You did have someone come in and raise a price target on Nvidia to $200 a share. I'm going to mess this up, the name. Susquehanna?
Oh,
No,
Susquehanna.
you did.
Yeah,
Yep,
they're huge.
yeah.
Susquehanna. We used to work with them at Bright Trading all the time too. Susquehanna. Back way
Susquehanna
back in the day.
raises price target to 200. So you got some kind of battling analysts this morning on AMD. I still think long term, right? Even if the AI stuff is like, a quarter of as big as people think it's going to be, AMD should still benefit long term. But I think you're probably seeing some exhaustion from people owning this stock that are like, man, I bought this for the catch up trade and it's just not catching up.
It did. It did catch up. It caught up in January, February, and March, and then it just caught up way too much. I mean, and the valuation got too stretched. I bought it back when it was 30 times. I looked at my cost basis on the weekend. It's $94. And then was trading 30 times earnings then. And I'm like, this is a reasonable valuation. Well, it went from 90 to 220. They didn't really grow earnings. And, the valuation went to 58. So it just got overbought. So now it's in the digestion period where now you're kind of stuck in the middle. You're like 48, 49 times. It's more expensive than Nvidia. They have a less market share, so they have the potential to catch up here. And I think Lisa Su, don't bet against her. But you're in like digestion consolidation period here right now between 160, 175. I'm not adding to it. I'm not subtracting from it. I have that small original position from $96. And that's pretty much it.
Much easier technical read on this one than the Nvidia, right? Because you had like what it looks like could be, who knows, will be a major long-term top. Could be. Let me just put a big question mark there. And you had a really big haircut, right? From where this hit in March, if you think about that on a percentage basis, in March it peaked at 227.30, then it troughed at 141.16, just not too long ago. So that's so much different of a chart than the Nvidia. Then you had to rebound. Then like, okay, yeah, AMD, couple upgrades, man. AMD is going to be they won't be number one. They're going to be strong number two. And you got a nice rally off that, right? Up to the 173 area. And now it's the moment of truth. You made a much lower high, too. I mean, you didn't even come near the April high, let alone the March high. So I look at this to the recent high, the move. I look at this recent low down here, and your number comes out to 157. And your low just a few days ago was right in the 150, 158 area, 158.27. So as long as AMD, you're still $5-6 away from it. As long as you hold in here, turn up, take out this 174, work your way to 180. I think the bulls establish control and maybe get half back of this entire move. But if it starts to weigh down too heavy, or you get a big market downturn here, you breach that 157, 158 area, then really you don't want to do a projection of an 80-point, decline from 220 to 140. That would take you sub $100. I'm not looking for that either. But you're right, consolidation periods are extremely important. That's exactly what you have here, and you're holding in there. So let's see, hold that 157, 158. Still got to be bullish AMD, but man, once that cracks here, I'd be looking for 140 and beyond.
AVGO, I just want to talk this one here too, because you got the analyst action on Morgan Stanley with obviously, is it Morgan Stanley? It was Morgan, wasn't it? Just getting it right. Yeah, Morgan Stanley with the downgrade on AMD. They also reiterate their buy on AVGO. And it's actually got multiple catalysts here today. So AMD reiterates the buy on AVGO or resumes their buy on AVGO. They call it overweight at Morgan Stanley. But it reports Wednesday. Also, Broadcom very closely tied into Apple as well. So keep that in mind with the AI event coming. Maybe there's some mention, maybe there's something with Broadcom in there as well. If Apple does well with their AI event, we don't know. Obviously, that's later today. But multiple catalysts, multiple reasons for why Broadcom is trading higher. I was long Broadcom over the weekend because it reports this week. I like to be long stocks ahead. I've already sold it. I'll probably be playing this from the long side though ahead of this. So it was good. AVGO 1406 up to 1422.
Not much to say about this one. I mean, this is all-time high, I believe, or let me go
Very
back to the
close.
chart. Yeah, 14. Oh no, it's got a little ways, 1445.40. Well, well, you got a nice setup here. If you're looking for more on this pair of highs from Thursday and Friday, let's call it 1424. That splits the highs of the last two sessions. You have not hit that yet in pre-market trading.
All right, should we talk some an activist position, or should we talk some additions and subtractions from the S&P
Do the
500?
activist position first, and then we'll go into some S&Ps.
All right, let's do the activist position first. So Elliott coming in, taking a $2 billion stake in Southwest Airlines, ticker LUV, getting some love this morning, trading up around 8% after, again, activist investor Elliott Investment Management has built a nearly $2 billion stake in Southwest Airlines and plans to push for changes aimed at reversing the airline's underperformance. This came from a Wall Street Journal report yesterday. And we had talked about this on the show, just how Southwest really went from being like the leader of the pack, maybe five plus years ago, to being like the dog in the pack of all the airlines out there, which as a whole industry has recovered, but still not really at a lot of the pre-COVID levels that they were trading at. But like, I mean, Southwest here, if you've been bag holding Southwest, this is a good morning for you, because I can't remember another day in the last few years that Southwest is up 8% going into trading.
There's no activist you want more than Elliott in your stock. I mean, you think about the activists out there, and there's a lot of them. The market loves Elliott. The market holds Elliott stocks up. I mean, Pinterest, they brought them back from, death.
Yep.
Like Pinterest was just in the gutter. This is a couple years ago, obviously now, and look at where Pinterest is here now. It's up at 44, and you can say, oh, it's the market. But a lot of those smaller mid-cap names really haven't participated as well, not Pinterest. Elliott is the company you want. If you want a turnaround story, you want Elliott involved. They've just done so many good things, to get, obviously shareholder value out of beaten down names. Southwest is a beaten down name. It fits the bill. Might come in here, invest in an airline, though. I don't know what the sexy story is here going forward. Maybe not, but I tell you, it doesn't hurt that Elliott's in there.
Huge move. I mean, over 2 points. I mean, that is a huge move. So I'll just give you, over $30. That is, take your average daily range in that blows it away. 30.43. Don't think you're going to hit that today. I mean, you have the top of the gap area at 30.78. So for right now, that could be a target on the upside. Once it gets back in the gap, then even less resistance. Elliott doing some step up buy-in. Look at the price action. Like he saw the last dip, and look at those 1, 2, 3, 4, 5, 6 days. So he bought on the dip. Chances are on any other dips, I mean, he's going to be buying again. So maybe, I don't know if you could be patient enough to wait for a gap fill down here at 28. But if I saw this at 28, 28 and a half, I'm a believer in Elliott. Then I'd be looking there for a long-term position, easily leading on that low of the move at 24.60. But the first thing I would do with Elliott and our Southwest, I would be stop canceling flights. Get your new computer system in there. Maybe have Bert from Benzinga go over there and redo your stop canceling flights. Stop stranding people. And like it seems like it happens every 6 months. So if they could, not necessarily great earnings or whatever, if you could just avoid bad news, then that could be a catalyst for the stock. So not faded Elliott on this one, but not buying it up $3. I think it's probably got a boatload of stock at 30, and then all the other stock that you're going to have to consume from 28 to that $30 level.
I'm sure there have been other activist positions in airlines throughout the years, but the one that comes to mind first for me is Carl Icahn buying a bunch of, what was it, TWA back in the day, and that didn't work out hard. It just seems like a tough industry. Like you look at the airlines as
wait a second, AB. When Carl Icahn bought TWA, you were probably in diapers.
I don't even know if I was alive, but
He reads a lot of history books.
yeah, I've read the,
It's good with history, man.
Well, they
I just want to say, besides your sports acumen, which puts you, above our previous other producers, did you take a lot of history classes?
I've liked history classes, and the TWA Carl Icahn stuff specifically. There's a lot of St. Louis history there because I think they were like,
Oh, okay.
like
Okay.
a lot of people point to that as like the downfall for St. Louis's like airport, which led to a lot of other problems, this and that.
Okay.
So like people are like, oh, Carl Icahn screwed over St. Louis, and so it gets talked a lot about there. Yeah, but like Jay Rice's point, Buffett got smoked in the airlines, and like that's what I'm saying is like it just seems like a tough industry, and so as an activist that probably doesn't have as like that much expertise in the industry, like how are you going to come in and say, here's like I assume like Southwest is gonna be like, look, man, we're trying, Elliot. Like we're trying to make money here. It's a tough industry. Like, and so I don't know how much, it seems like there might be other companies that
we charge people for the bags. Like we tried everything.
Yeah, exactly.
What about that?
No free drinks.
First of all, if you're jumping into whatever Uncle Carl does, you might want to think again here.
What has happened to him? Like, holy, Uncle Carl was so influential. He was more influential than Roaring Kitty at one point in time. I mean, IEP, and I don't know if it's just, but anyways, we're at like multi-year or all-time lows here. Icon Enterprises is just disaster. Just an epic, epic disaster here. $16 a share here now. I know they had a dividend. It's like 23%, but is it a dividend or can they keep paying it? Who knows? I don't know, man. Uncle Carl has fallen off, though. Like he gets mentioned in a stock, people don't even care anymore. It's oh, Carl Icahn's bought some. Buy. And the market just does not give Uncle Carl any love anymore.
What about when he buried and he got all his pub? We were doing the show back then, burying Ackman on Herbalife.
Oh, yeah. Remember that?
Yeah.
Circus show? You think like Roaring Kitty was a circus show? That Icon, Ackman, CNBC got them both on there live. Ackman versus Carl. Icon dropped like an F-bomb or something on CNBC. I think it was. And they didn't get it beeped out. And then it was like, holy, the crowd goes. I think he did. I think it was an F-bomb. I was like, wow, Ackman didn't do that. Ackman wouldn't do that. But Icon was worked right up. I'm like, holy, that was good.
And I can't remember the exact day, but it was definitely pre-COVID because I remember being in the office. There was a day where Uncle Carl got flat Apple. And the same day Warren bought it. The exact same day.
Wow.
Yeah,
Uncle
I remember that.
Uncle Carl has done a few bad things lately.
Yeah, we tried to get him on the show.
Selling to Buffett. You never want to sell your stock to Buffett. And again, it might just segue us into the Oxy conversation here because Buffett buys nothing in this market except what we talked about last week is we're coming to the Buffett zone. We got the Buffett put on Oxy, and lo and behold, he can't even wait. He's like so excited. I thought he'd wait a little bit longer. He couldn't. He comes in, buys another, 2.5 million shares last week of Oxy, gets disclosed on Friday night. 2.565 million shares at $59.75 in the open market. He can't stop buying Oxy. He's like he's addicted to Oxy. I just realized it. Buffett is addicted to Oxy.
That should have been the title of the show today.
The media will run with that one now.
I mean, there was that in the, I think Oxy was the big drug in like the DuPont cases and stuff. So maybe we'll have to buy some, maybe DuPont will be a play here as well. But I mean, Oxy, like it's been struggling. And I think a lot of people, like, I wonder where this would be if Buffett wasn't involved. And that's, like, I feel like to me now, when I think about Oxy's stock, I'm not even thinking about, the term, like it's just Buffett in my head. Like, oh, well, Buffett's in it. So it can't be, it's gotta be at a decent valuation and pretty cheap down here. But probably a lot of people have bought this because Warren's in it and are underwater on it. But I mean, I think if you're still bullish the overall economy right now, that a lot of these energy stocks will come back from the recent downturns. I mean, you look at Is Oxy underperforming like the Chevrons and the Exxons, or have they?
I
Are
think so.
Well,
Kind of
you know
in
what
there.
the thing is? This is it. Warren has a number in his head that he thinks Oxy's worth. Okay, I don't know where that number is, but it's higher than 60. I tell you right that. And
But he
I
doesn't
don't.
sell any. Has he
No,
sold any shares? I don't think he sold. It went up. Think about how many times we made money off the Oxy. Buffett, you got to become more of a day trader. We buy it off of you, so buy it off of yourself. And then, 65, you're dumping. 66, 70, dump some of that, man, because it's coming back. It always seems to come
well,
back to the Buffett buy zone.
yeah, I mean, he averaged, he frowned and averaged down, because if you go back in the history and everything, he was a big. What was it? ADP, was it Anadarko that he helped them buy? Do you remember that? This was back. I know for sure this is fact. This was like in 18, 19. He helped them out. He put up some money on the deal, and then I don't know what he did between 18 and 20, but then he started post COVID. He started getting real active again, bringing his costs down. So, like, his cost basis is not like 51. I might be wrong. I don't know instant, but I know he bought some here. I
He's
know he
right in
bought it.
here. He's bought
Yeah,
so
I
many
think so.
shares in here. I think it's 57 to 60.
Yeah,
He's right in
right.
his cost basis. I guess he's getting a little dividend there,
Yep.
1.4% away, which is very small in a 5% environment. But I mean, I'm probably going to buy some in the Buffett buy zone. I was waiting a little bit, though. I didn't think he'd come in as early as 59. I was like, he's coming at 57, 56, 58, 59. I bet you he's raising his cost basis a little bit coming into the 59. But I mean, he owns so many shares. I think you're a buyer in this zone. I said it last week. I think you're in the Buffett buy zone here. So 57 to 60, you're buying Oxy. I want to argue with you. It's worked with it for us on this show a lot of times.
Okay.
All the times it's worked. I mean, I bought it as day trader. I had it in the day trading portfolio, I had the long-term portfolio, I had Oxy Erics. I'm like, Buffett keeps buying, I'll keep buying. I was like way bigger than a normal size position on that. Multiple times. It was fun. I haven't started playing again here yet, but I'm probably gonna start buying it, the 58, 59 area, and then trying to flip it out 61, 62s. Just, playing it off of that, saying Buffett's gonna continue. You got the Buffett per here. I mean, it could go lower. Anything can happen. Maybe, there's some oil news and it drives it lower, but man, it's nice to have Buffett with you.
Yeah. Gabe Fave put a good one in there. Are those people who are blindly buying because of Buffett
Me.
any better than those doing so for Roaring Kitty?
Yes.
Tongue in cheek.
It's Buffett.
Yeah. Okay. All right. 8:49, and we didn't even
S&P
get.
ads.
Yeah, Dennis had some fun on Friday while we were all beginning our weekend, relaxing, walking the dog, having a cocktail. Dennis is up trading until 8:00 at night.
Yeah. It kind of just new. So it gets announced 3 new S&P ads. AB, give us the 3 stocks here. I'll let you take, and then I'll take over the trade.
The 3 stocks, you had KKR, you had CrowdStrike, and you had GoDaddy going into the S&P 500. You had taken out Restoration Hardware, ticker RH. I'm just going off the top of my head here. Hold on. I know this. I'm going to try to think of the other 2 that got taken out. No, I don't have it. Someone help me out here.
I do. They took out Co-America, Restoration Hardware, and Illumina. And I believe Illumina is an icon stock. I'm not sure if he's still in it.
Yeah, and Comerica is a Detroit stock. But we have Illumina in the biotech space. You have Comerica, of course, a regional bank, and then Restoration Hardware, consumer goods. So it's from different industries getting taken out, and we talked about it on the pre-market show. Just that the S&P, the index does not like to add stocks that are weak or showing weakness. So a lot of people were anticipating a Palantir being added. There were a couple other names being thrown out there, but I think GoDaddy here was the biggest surprise. I mean, a
little bit, yeah.
I think about GoDaddy like the old commercials, the Super Bowl commercials back in the day, Danica Patrick, and that stuff. But like, you don't hear about GoDaddy that much. We've talked about it as it being a potential AI play, but I mean, definitely the most surprising here was to see GoDaddy get added. But if you're in any of these stocks, KKR, CrowdStrike, well, GoDaddy's not really getting as much of a pop as the other 2 are this morning.
Yeah. So there was a trade here, and I like to play, and try to anticipate. I do a little bit of news anticipation. CrowdStrike was rumored all day to be going in. It was up on the day on Friday when on a day when a lot of stocks were not up that much. CrowdStrike was definitely bucking the trend, and it was rumored. And then you started looking, and these were like the candidates, like Workday. So I sat and did my analysis. I'm like, Workday, they've talked about Workday the last year. I'm like, Workday's been going straight down for the last quarter. There's no way they're adding Workday. So I'm like, I'm striking that one. It's not going to be Workday. Elf Beauty has been a candidate. I'm like, I don't think they're adding Elf either. Palantir, I'm like, I don't think they're adding Palantir either. It's kind of just been going nowhere, although the last couple of days it's been lifting up. But really, it's not, I'm like looking at all these names and these candidates. Dell was one, a wild card. Some people were saying Dell, and it did obviously not get added. But I'm like, the obvious one here was CrowdStrike. Like, I have GoDaddy on my list. I didn't have KKR on my list. But I'm like, I'm looking at this CrowdStrike. I'm like, they're going in. I'm like, I'm pretty confident they're going in. Then it started getting bid up after hours, like pretty heavily. And I'm like big buyers after hours. I'm like, I don't know if they know anything or not, but they're gambling. And you know what? I'm going to gamble with them too. I'm like, I'm gambling. So I bought it after hours just because I knew the announcement was going to happen at 5:15. So I bought it at like 5:10, like 5 minutes before it. I bought it at 3:52. And I'm like, you know what? If they don't go in, I'm going to try to get out as quick as I can because it's going to go down. Like when they don't go in and they're anticipated to go in, it's probably going to go down. But I'm like, I think it's going in. And then it was late. It comes 5:15. I was like, that's not popping. I went to the site and it's like the site was down. Then at like 5:60, because everybody's trying to hit it. And then 5:16, it gets announced and CrowdStrike blasts off. So I was able to make 15 points, I think, on it. So, which is good, or 14 points or something. So just, a quick trade. And I was in and out of it in about 7 minutes. But just the analysis looking at it, I was like, I thought it was going to be CrowdStrike. They got the sexy cybersecurity story. There was a lot of reasons to think it was going to be CrowdStrike, and the trade was there.
And yeah, I mean, basically, if, for whatever reason, like I said, I found it interesting that CrowdStrike and KKR were getting these big pops going into here, but GoDaddy not getting as much of one. The stocks leaving, RH pretty flat this morning, I believe, but it has been showing weakness for sure. I didn't realize, RH has, it got way overextended during COVID. It got up to $725 a share and is down still 62% from there and hasn't really come back at all. So this is one of those stocks that, and I guess it kind of makes sense that during COVID, you had a bunch of people that bought new houses or they were buying a lot of furniture, redoing their house because they were at home all the time. Maybe they were redoing their home office because they were working from home and were buying things from R&H. But I mean, man, like this thing has just been an absolute dog. And just trading really flat over the past 2 years while the market has been making new all-time highs. So I don't know what maybe RH needs Elliott to come in and do some activist investing there.
It just got to a ridiculous valuation too. They were coming in and this was like, I just don't totally understand why, the stock went from $30 to $680, and that's what it did over the course of 10 years. It was just too much. And maybe like me and Joel, we've joked before, like my wife walks into that store and I'm just like on pins and needles because every freaking thing in that store is like 10 times more expensive than it should be. There's the couch sitting there. It's like $10,000 couch. I'm like, please don't like anything in here. You're looking at it like this, anything. Like it's just so expensive. So, I guess they sell one thing and they make a lot of money, but I never got it. But they have a good online presence. There's people that like their stuff. The stuff looks cool in there. It's just so expensive. So maybe we're in a booming economy, AB, and people were just buying, whatever they could. And maybe the economy slowed a little bit to our point that we've been saying the last couple of years, big ticket stuff not selling as well. They sell a lot of expensive stuff. So that's probably hurt them as well. I think the economy isn't very good for a lot, been holding up very well for a lot of companies, but big ticket stuff is not selling as well.
All right.
CrowdStrike, just real quick. It got that initial surge here and then did go to a new all-time high at 373.95. That's not too far away. So hang on. You want to hang on for that as a target. The former all-time high is boom where is it? Wow, it's way above the former all-time high. That was at 365 even. So maybe use that as a little intraday support if you fall back. This would be one if you got you still got the Jets off the open, takes out the pre-market high and just keeps climbing, and then somehow has a reversal back down through the open. then that might be, a little bit of a sign of an exit point. GoDaddy has been consolidating for a long time near the high of the move. I believe this is a new all-time high for that. Same thing, initial surge off the news that took it to 146. That has a little bit more work to do to get back to 146. KKR, man, this is the one that has the Jets, man. This is one that up $7 on 72,000 shares. This one, I don't know. It almost feels like you got to hit the sell button on this one off the open if you want to sell. Selling up the old time high in this one is 108. So keep an eye on that for KKR that was made last month.
This market too, we should just go back to for the last few minutes. I mean, the TLT continues to roll over here. We obviously got the bad, jobs data, not whatever you want to call it, good jobs, bad jobs. It was bad for the TLT, bad for bonds. IWM did end up following suit and, had closed very weak. We got the same story continuing to happen here today. Tale of two markets. You got tech holding up fairly well. Apple event, Apple's trading up on the day. And then you've got the TLT getting hit again and the IWM down another 1%. I mean, these small cap catch-up trade is just not happening here, Joel. I mean, if you're in the small caps, you're waiting for that catch-up trade. Yep, eventually it's going to be the small cap market. You got to get the interest rate cuts. I think you don't even think about buying small caps until you start seeing inflation data and talk that the Fed cuts are imminent, like they're happening, like next week or next month. We're just too far out, and the market doesn't want to wait. And the IWM needs the interest rate cuts. They need it. Tech stocks don't. So very difficult market here overall. Sitting here at all-time highs. Nvidia post, hangover here. I think you're going to get post-split hangover here. You got an Apple event that better go well, because if they say anything that doesn't, that they don't like, you can actually see a tough day for the markets here. I would be, and I said this Friday, or I said this last week, I'm kind of nervous here about the market right now. I know we're sitting up here at all-time highs and everything looks fabulous, from a technical perspective on the S&P. But when you lift up the hood and you look underneath the hood, there are so many stocks that are breaking down, and tech stocks too. Like look at Unity Software. We talk about that. It goes down every day. And maybe it's just that stock, but there's a lot of other ones here too. Upstart, back to downstart again, what Money Mitch used to call it. Affirm, breaking down, making new lows. ARC not doing any good. That's tech. Then you go airlines, we know have not been great. IWM just is a disaster. It's 2,000 stocks there. I mean, there's a lot of reasons to say that this bull market that everybody is saying is so awesome is really just mega cap tech.
Yeah, I mean, I think with interest rates where they are, if your profitability is in question even slightly, you're getting kind of punished here, and I think that's where a lot of those stocks that you just named fall under that umbrella, including, I mean, if you look at the 2,000 companies in the Russell 2000, a lot are not profitable. And they're like you said, they're begging for those interest rate cuts. They need them. So the Unities, the upstarts of the world, not really surprising to see them struggling with 5+% interest rates. But we shall see. Again, quick housekeeping note this week, we do get a lot of economic data that will give us more insights into the Fed's ability to cut interest rates. Wednesday will be a huge day. We have CPI report coming out at 8:30 in the morning, and then the FOMC interest rate decision at 2 p.m. I think we all know they're basically going to keep them the same there. But then Powell will speak at 2:30, and then Thursday we have PPI and initial jobless claims. So we'll have a lot of data this week that should be market moving. My prediction is that I don't think this month's CPI is going to show a big drop in inflation, but I think going forward, maybe June's report that we'll get in July will start to show that some of these prices have started to come in. Joel, you're pulling up some stocks here. We got to wrap up, but you want to say something real quick on Carvana?
No, I was just we didn't get to Carvana. That got the upgrade, so I was just looking at that trading up. I'll just for Carvana traders real quick. You had a pair of highs. Just call it 110. 110.50. That was your high, 110.94, but the last two highs are 109.89 and 110.94. So keep an eye on that on the upgrade. Tomorrow, T3 Tuesday. I'm not sure who's going to be joining us. I know Scott. Scott, if you're listening, still on the mend. We hope he's doing well. But we got a fun week because we have the CPI number, on Wednesday, PPI on Thursday. We have Oracle earnings coming out. So we got some catalysts. Of course, the Fed meeting, our data-dependent Fed on Wednesday. So starting out the week with some good things to talk about. Also, remember, you got the rollover the second Wednesday of the month. You roll over from the June to Sep. So you always see some kind of choppy price action as the big boys move their positions from the June to Sep. So that's it for today, folks. Thanks for joining us here on this Monday.
Big game tonight, Dennis. Any predictions?
They got to win. I mean, you don't want to go down 2-0. They came into Florida.
Oh, wait, I thought going down 2-0 is fine in hockey.
It isn't advisable. So you don't want to go down 2-0 in the Stanley Cup final. So they got to win tonight. They got to play like they did. They need Skinner to play well. They need to find a way. Shoot high, Bobrovsky. They weren't shooting high. They showed before the game, they showed his weakness. He's letting goals up high. Hyman had an open net up high. Nuge had an open net up high. They both missed. Shoot up high. Oilers, shoot high. That's it.
Yeah, we'll see if they can get a few more. I mean, they got some power play looks last game, but if the Oilers can get some more power play looks tonight, I hope they can at least get a couple by Bobrovsky. But the way he played last game was just unreal.
He was so awesome. Yeah.
But all right, guys, that'll be a wrap on today's show. Thank you to Scott Shellady, Cow Guy, for joining us at 8:10. Thank you to everyone who tuned in. We will have live trading started up right now. And then again, like Joel mentioned, tomorrow's T3 Tuesday. You don't want to miss it. 8:30 a.m. Eastern. We'll see you there.